Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is the show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. First, let's welcome our experts, independent advisor Sharmila Joshi, Vineeta Sharma of Narnolia Financial, and Avinash of Joindre Capital Services join me on the show. Thank you to all of my guests for joining me. Today on Hot Money, we'll discuss the ZEEL stock of ZEEL Entertainment had fallen significantly, is up almost 12% in today's trade. MARUTI fell in 8% post a weak set of numbers. Will the trend continue? ULTRATECH, despite a decent set of numbers, has been falling given the fact that the commentary was extremely weak. And M&MFIN Financial reported their numbers on Friday after market hours. Is there more traction on the downside, or will you buy this company? Is something that we'll ask our guests. But let's start with the first one, and that is ZEEL Entertainment. Fell in almost 30% on Friday. Today has managed to recover. It's up almost 10%. But is it a time that you should accumulate the stock? You've seen the cases like Yes Bank, which have risen significantly from the lows, or a Jet Airways. But is ZEEL Entertainment one of the stocks? So we'll ask our guests. Avinash, will you buy ZEEL at this level, or will you be cautious?
No, I think Darshan, I would definitely buy it, if I were to look at a time period of at least 18 to 24 months, because our sense is, the business growth is quite strong. The company has a very strong, product bouquet, and I don't think that, apart from the promoter pledging, the business in itself is actually, showing some signs of weakness. So I would believe that, the weakness should be used to actually take a longer term call. In the short term, the stock may remain volatile, may remain weak, considering that, that promoter pledging is going to be an overhang on the stock. But once the strategic sale happens, Darshan, I would believe that the markets would definitely look at it positively, and the management has also clarified that they have got an arrangement with the lenders. So I think clearly the kind of panic we saw last week, I don't think it's going to be repeated, at least in the near term.
You think now ZEEL is on the back foot, given the fact that now it's come to the forefront that the strategic sale is mainly on account to pay debt in some of the infra companies. Now they are finally admitting it, what was already been said about, and now since the prices is much low, they will lose the bargaining power to get a decent price for shareholders if they sell the stake.
I think that definitely is there. Whenever a seller, sells in these kind of situations, Darshan, the buyer definitely has a premium and a kind of a dominance. So I would believe that, the kind of mistakes the group did in investing in most of the infra investments, I think is definitely going to hurt on the valuations, because obviously the valuation will be done at an extremely attractive level to the buyer. And I think to that extent, the ZEEL management has obviously understood this. But net, I think they would be definitely be trying to take out as much value as possible, from the stake sale.
Okay, what about you, Sharmila? What's your view on ZEEL? Now that everything is out in the open,
Yes,
it's fallen significantly, it's recovered. What should one do? If someone is now taking a fresh perspective at ZEEL, what should he do?
I think wait a bit.
Okay.
I wouldn't buy immediately. Definitely, I think I completely agree with the point that fears are now allayed, in the sense that I think the management has worked really hard over the weekend to really have a signed document in place. It's not just something that their lenders have said. They've signed on the dotted line, so to speak, and said that they'll give them that time. I think the two issues that would prevent me from buying it at this point in time is what one thing that you alluded to, that they've said that that they still have the bargaining power, so to speak, with the strategic buyer. That I don't know, because it obviously seems to suggest this development that they would be on the back foot. So I would wait for that to happen, and at what price it happens. So they have that time. I'm sure they must be pretty close to doing the deal. Otherwise, I don't think the lenders would have so quickly signed on the line. But yes, I would wait to see what price it gets done at, and I think they would be on the back foot. I think the second thing is that obviously there were huge shorts in the system, and some of them are now getting covered.
Okay.
So I would wait for that situation also to sort of stabilize before you think of buying the stock. But yes, I agree in that sense with Avinash that now fears are allayed, and definitely ZEEL Entertainment seems to be on a stronger footing than some of the other group companies like a Dish TV or whatever. So I think that it is now coming to valuations that make it attractive.
Okay, Vineeta, what have you advised your clients? Obviously, a lot of queries must have come through post this drop and the big move today. What, as a research house, what have you all told them?
So, purely from model point of view, tracking this company has become a little difficult as to how the strategic partners will come in, and what will be their strategy, as to merger, demerger of various companies that are maybe ZEE5, they wish to demerge into a separate company. So it will be a little difficult to analyze from model point of view. Otherwise, if we just look at ZEE, I think the overall business structure, the kind of brand presence it has, the kind of, it has some 4,200 movie titles, some 250,000 hours of television content that they have. So I think purely from content point of view, the brand presence, the customers, all the are well connected to ZEEL. So from that point of view, I don't see any problem in the operational business. Definitely the promoters have invested into some areas which has not panned out well, and that's the reason for them to sell the stake and get out of it. So I think anybody who wants to take a long-term view and who can sail through the volatility in the stock prices which will come, they should get some value in ZEEL. The kind of valuation it has come out now.
Have you revised your targets on ZEEL?
So right now we have not been able to come out with a report till some clarity emerges, but otherwise we have been positive on ZEEL, and we had a target of 460 odd rupees earlier.
Okay, so that's the view that's coming in on ZEEL. I think the consensus view we are getting it, at least in the short term, there will be volatility, but for a long-term perspective, yes, it's a portfolio stock that you should accumulate over the next 18 to 24 months. So that's the first stock, ZEEL. The other one is very interesting, and that's Maruti Suzuki. At 10,000, everyone wanted to buy, and at now 6,500, no one wants to buy. So what should one do? Have the fundamentals totally changed in Maruti of late? That's something that we want to ask. Sharmila, it's down 30% in the last 12 months from 10,000, now it's almost 6,500. Would you buy at this level? Have things totally gone wrong? Single digit margins coming in. Have they lost the plot, Maruti?
So yes, I think the margin picture is certainly not very encouraging. I think the positive over there is that the management had somewhere indicated in their commentary even before the numbers that they are seeing that stress, and that this year is going to be a challenging year. I think the second thing that you need to note is that the demand seems to be slowing down across the space now. So the numbers have been weak for quite some months. I think we mustn't forget the fact that it's coming on a higher base. But it's been coming on a higher base for quite some time. I think which is why market had gotten a little sanguine about it, because you always expect that higher base to hit autos at some point in time, but it hadn't been happening for the longest time. So they've really had this good run for I think good 2-3 years where month on month numbers look good, margins look good, and now suddenly you have in the last 4-5 months that picture getting disturbed, festival season not being what it should have been, etc. So I think not only Maruti, but I think that this entire space is seeing that correction, and to my mind that pressure is going to continue, which is a little unfortunate for the CVs, because I think there the cycle is not disturbed as much, but because I think this entire space is viewed together, reality has come to the sector, so valuations will also correct, and prices will also
What
correct.
about you? Do you agree that that the sector is now going through pain, and this pain isn't going to get up and get out of the sector very, very soon, and Maruti also probably will actually continue with this pain point, or you have a different view?
So I share the same view. The volume growth that we have been seeing in the entire auto space is very sluggish, and that's a view. We have been neutral on the space for quite some time, and looking at Maruti, leave around the brand presence and the way they have come out with Nexa, and the premium brands are still premium brand cars are still seeing some amount of growth for Maruti, but the core volume growth in the lower segment, that has not been coming, and coupled with the kind of discounts that they have given, and I think to boost the volume growth, that will continue for some time, which will have an impact on the margins. So 9.5% kind of margin should be sustainable, and little bit of premium, maybe some improvement, little bit here and there, maybe because of the cycle improvement in the raw material, but purely from the realization point of view, I don't see margins to take a better picture from here on.
Okay.
So we have a neutral rating on Maruti as of now, and that's a view. We will not advise somebody to get into it for a quarter or two. No.
Okay. What about you, Avinash? What have you advised your clients on Maruti?
No, I think clients who have actually taken positions at higher level, Darshan, we have told them to hold on, because our sense is that rightly the next 1 or 2 quarters are going to be extremely challenging in terms of margins and volumes, and the management actually mentioned in the conference call that the overall industry would grow by not more than 4.5%. So clearly numbers would definitely not increase significantly in the short term, but longer term our sense is that the kind of positioning Maruti has got, I would not be surprised that maybe after 1 or 2 quarters the growth revival could happen, and with the NBFC issues being resolved, the larger part of the story was that NBFC financing also has taken a hit. So probably maybe we could see a little bit of revival from the first quarter of FY20. So clearly we have told our clients that probably don't buy fresh, wait for some correction, because the fourth quarter this time is also going to be pretty weak. In fact, Jan numbers, the management clearly hinted, have shown a weakening demand trend. So we will probably see a fourth quarter which is a weak quarter, and probably at that time if the stock corrects further, that could be a good time to accumulate.
Okay, that's the view that's coming in on Maruti. The next one we want to talk about is ULTRATECH Cement, and obviously the numbers were in line with estimate. I think the market was spooked because of the weak commentary that came in terms of the outlook as far as realization and utilization. So when the country's largest cement plant company is saying there are issues, there is a lot of trouble for the sector. It's down another 4% today. So clear amount of weakness. Vineeta, what did you make of ULTRATECH's number? It's fallen more than 10-12% right now. Is it an opportunity to buy, or are you as cautious on the cement sector now post the commentary?
So post the commentary, it's not that we are too cautious on cement now. We have revised earlier, we were neutral, but considering we are expecting some demand revival to get in, and management has said 9 to 10% volume growth, demand growth in the industry, and realization definitely in the north side they have improved. And maybe for a quarter or so this will not impact the margins, because on the cost side things are getting better. So net I think there should be some amount of EBITDA margin improvement. Volume, if the kind of volume that is coming in, if that stays, it will be good amount of profit growth that the company should report, considering some of them are at a quite lower valuation. For ULTRATECH as such, there has been lot of mergers into the company, and there for such a big acquiring JP, then Century, and then Binani. So the company, it's not easy for a company to get into all the things lined up in just a quarter or so. So maybe that will remain an overhang for some time, but otherwise we have a buy rating on ULTRATECH, and even ACC. These are the two companies on the cement space we are liking.
Okay, Sharmila, what's your view on the cement space post ULTRATECH? I think the entire cement sector is now looking weak. Is it the time to accumulate ULTRATECH, or are you cautious because what the commentary does indicate that there could be more potential downside?
Yes, absolutely. I do like ULTRATECH at this, as within the cement space, but completely I think, to just take off from what Vineeta was saying is that, I think that the demand picture seems, that's what has spooked the market. It is not so much the results per se, because the results were okay. Yes, sure, you had little pressure on the margins, and but that could improve given the fact that their production costs are coming down, raw material costs are showing improvement. So crude has come down. So, you could see an improvement in margins going ahead. But I think that's the whole issue, that their commentary said, and it showed in their numbers as well, that demand is still sluggish, and largely the demand is coming from the institutional segment, where you don't get too much of, you don't get very high margins. So, the demand has come from there, and you are not seeing a recovery of that. And my guess is that till the elections are out of the way, you are not likely to see too much of an improvement in the demand picture. So given that, I think yes, it clearly seems to indicate, since ULTRATECH is such a large player, that the entire cement space is going to feel this pressure till I think the elections are out of the way.
Okay, and Avinash, what's your view on ULTRATECH?
No, I think Darshan, numbers were definitely steady, but overall, if you look at the kind of financing what they have done for the Binani deal, I think in the near term, the debt on the balance sheet becomes extremely high, and I think at least over the next 1 or 2 quarters, we could find that possibly higher interest costs could possibly be a drag on profitability. And overall, the management commented in the con call that almost 17 to 18 million tons of incremental, cement capacity is coming over the next 12 months. So I think that could possibly also put a little bit pressure on prices. So I think overall, it's better to wait. There's no doubt that ULTRATECH will do better in the longer term, but I would prefer to wait for at least a quarter or maybe a quarter and a 2, because I think probably margins could be a little hit because of the Binani acquisition.
Okay, so that's the view that's coming in on ULTRATECH. I think the consensus view is that wait and watch in the short term, but a long term bet is something that you can take on ULTRATECH Cement. And the final stock we want to talk about is M&M Financial. Came out with numbers which were rather muted or mixed, you can say. While the NI growth was not that strong, asset quality did manage to improve, but the market's not liking the result. The count is down almost 1.3%. Avinash, M&M Financial, what should one do? 410, is it a good level to start accumulating?
Yeah, I think clearly, I think within the NBFC space, this is one player which has shown a decent improvement in asset quality, AUM growth, disbursement growth. Although asset quality levels still remain quite elevated, I would believe that, if an investor has a slightly medium-term view, he should wait for a small correction and then enter, because clearly even at these levels, the price to book appears fairly, expensive, and most importantly, clearly with the kind of incremental growth now for CVs taking a hit, I think that would be a key factor to watch in the coming 1 or 2 quarters, especially the fourth quarter, which is supposed to be a bumper quarter for CV sales. So prefer to buy this stock at a lower level, considering the fact that long-term prospects, however, are quite good.
Okay, so it's a long-term buy. Sharmila, M&M Financial, what have you advised your clients?
So I think the positives obviously are the fact that numbers were okay, mixed bag as you said. Secondly, I think they've dodged the sort of the bullet which a lot of NBFCs have had to face with that whole ILFS issue, and that kind of, or they're not lending to real estate, etc. So they're in the safer side of of the book, but that space itself is seeing correction, as we are seeing from numbers of Maruti, etc. So that could be a concern. And I think when the entire sector is feeling the pain, you can't be the only one sort of where the price is going up. So I think there will be a correction, and I completely agree with Avinash. I think that should be used as a time to get into the stock, but not at this price.
Okay, and Vineeta, what have you all told your clients about M&M Financial?
So we have a buy rating on M&M Financial, and the overall disbursements AUM growth has been positive. Also, the asset qualities, as you said, has improved to some extent. The only thing is that how the auto sales emerges, because that is a main business. But to encounter that, the management is planning to expand geographies. So they are opening around 100 branches. So maybe even if the growth is not there in the sector, but because of their presence into newer sector, that will make the AUM growth go. But then one side will be cost, because NIMs are still under pressure. So also the operating expenses because of new branches, them turning into positive break even. So near term, I think some kind of margin pressure will be sustained. But overall, it has gone into a positive trend, and results are showing that. We have a buy rating on Mahindra.
Okay, so that's the view that's coming in on M&M Financial. Overall, at least in the long term, the view seems to be positive. The management of Tata Steel is speaking, but before that, I want to thank my guest, Avinash, Sharmila, and Vineeta. Thank you so much for coming in. Let's hear in what the management of Tata Steel is saying on the sale that they've done as far as some of the Southeast Asia assets are concerned.
Thank you so much. Thank you so much. Thanks.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Mubina Kapasi from ET Now. Please go ahead.
Hi, Mr. Chatterjee, as well as Mr. Narendran. Thanks so much for giving media participants the chance to, ask these questions. So I know at the risk of sounding repetitive, but just for the benefit of our television audience, I would like to just ask you once again that the new entity that will be having the 70 and 30%, combo of basically HPIS and Tata Steel. Firstly, the rationale behind Tata Steel maintaining its equity interest to the extent of 30% in the Southeast Asian assets, and also what would be the overall enterprise value of the new entity, sir?
Yeah, so the logic of holding 30% was more because we found that that's the most optimal way to, get the return on the capital. Basically, HPIS Group was keen for us to stay on, and we felt that we could optimize our footprint by divesting 70% now and waiting for a potential upside for the balance 30%. They're keen to build a partnership with us. We bring the knowledge and the experience of having operated in the geography for the last 13-14 years. They bring with them the capital and the interest that HPIS has to expand in the Southeast Asian geography. They have also announced another project in Philippines where they're building a steel plant. So in many ways, we thought that the right thing for us to do is to stay invested for 30% BloombergQuint and then decide after 3 years what to do with that. Or she can give you a bit more details on the transaction. Yeah.
So we would be transferring about 100% of our NatSteel assets and business into a holdco, and 67% interest in Tata Steel Thailand, which is what we have. And in that holdco, HBIS will take 70% of equity interest, and we will be taking about 30%. The enterprise value would be in the region of about $680 million, including debt of about 120 to 150 million, and the equity value for the transaction is about 535 for the whole business, and we would be taking about 327 million cash at the close of the transaction, which will be in the next couple of months after there are certain condition precedents from HBI's side for investments. And once that is all done, then we will close the transaction and form this partnership.
Okay, I think 685 is a very impressive valuation. So, since you'll be having the 30% equity interest in this entity, I think it's pertinent to also ask you about measures that could perhaps be taken by the entity to improve the EBITDA per ton. I mean, if I just purely look at it compared to Tata Steel's own performance in India, in Europe, or even in the newly acquired entities, I think on an EBITDA per ton basis, it's a bit disappointing. So, with HBIS as well coming on board, from a technological perspective, from a scale perspective, perhaps, could we be expecting some improvement in the performance of the Southeast Asian business?
So I think, firstly, to be fair to HBIS, they should be answering this question. But all I can say is, the Southeast Asian geography is an interesting and attractive geography. It's a different matter that the EBITDA for us in Southeast Asia is not comparable to what we deliver in India. Hence, our strategic interest is different. But if you look at it from a HBIS point of view, the Chinese market is maturing a bit, and Southeast Asia is a growth market, which is 80-90 million ton market, which is growing at 7-8%. So it's similar, slightly smaller than India, but growing at the same rate. So from that point of view, it's an attractive geography for them. For us, our home market itself is growing, and if we have to invest capital, we'd rather invest in the home market. So that's where the benefit comes for them. They get a footprint into a growing market with assets which have equity there. We have good customer relationships in both Thailand and Singapore and the rest of Southeast Asia. So they immediately get an entry into that. Tata Steel in Southeast Asia also imports steel from China to supplement what we produce there. So there again, HBIS can derive benefit from that synergy as well. So there are multiple reasons. The reasons why they would look at Southeast Asia is different. For us, it's a way of getting a partner who has greater aspirations for that region and can bring in capital, can bring in back-end supplies, and can bring in a greater ambition into that region because, like I said, they've also announced that they're building a steel plant in Philippines. So, they can have a much larger footprint in that region than we would have ambitions to have because of our focus on India.
Okay. And so your entire Southeast Asian interests now are within this new holding company. Is that right?
That's correct.
Okay, all right. So any plans to, monetize this stake in the future? I mean, I know you have literally just announced this transaction, but will you perhaps be looking at an IPO or anything of that sort in the near future?
That optionality is there. I think at the right time we will look at it. But basically what we are planning is at least for the next 2 to 3 years we will stay invested here. And 3 years is what we have in mind. And then after that we will see how it goes and take a call on what is the best thing to do.